Welcome to this two-series vodcast marking the 25th anniversary of UBS ETFs. We'll be looking to the future with Barry Gill and Amanda Rebello, and we are looking to the past with Ian Ashment and myself, André Müller. The fact that I'm looking to the past is probably subject to my age. We're looking to the past and we look at how these markets started, how product design, how client sentiment around ETFs changed, and we have a little glimpse into the future between Ian and I. Welcome everyone. I'm glad to have you here. I'm here with Ian Ashment, the head of portfolio engineering and trading. So Ian, 25 years of ETFs. Can you still remember sort of the first meeting, the first situation you talked about ETFs?
Thanks for having me first of all on this podcast. 25 years, it's a long time ago, but in some ways it just seems like yesterday. And I've been here throughout those 25 years and sometime before. So ETFs initially, we were one of the first providers to launch in Europe, as you know. And back then, there was just a handful of funds in Europe, maybe less than 100 globally. And people really didn't know very much about ETFs. I think that was the first thing. They were a really new concept. Great innovation, providing basic building block exposures. But the actual mechanics and structures of those were still in infancy. And really, our conversations at the early time was all about education.
Can you still remember who were the first investors in ETFs, so institutional, retail?
I think it was more retail focused. I think the reason, what did ETFs offer? They offered liquidity, they offered transparency, they offered ease of access, and low fees, particularly for initially retail investors. I think some of the big institutions could already get very, very competitive fees through mandates, through funds. But for retail investors, they're often paying very, very high fees in the funds they were using. And ETFs come along and kind of unlocked that market first of all.
I can still remember that created some tension at that point in time. As the management, we're often still split between an institutional business and the retail business.
Yeah, I think as the ETFs and indexing took off, and it began to eat a bigger part of the market share of actives, I have to say there was a little bit of a frosty reception when I went to some offices around the globe.
When I look a bit back, I think one interesting part was we were invited by wealth manager to help them creating a series of ETFs for their mandates business, for discretionary mandate. So how did you start that up, and what were the issues that you needed to solve in the beginning?
Yeah, I remember some of those conversations well. And I think the big benefit that we had here, André, as you'll recall, is that we've already been doing indexing for over a decade. So we had a really strong base of knowledge and technology in this area. So it was an extension of that extensive knowledge that we put onto our ETF platform, and that's really been the case right up until today. But I think the successes with different channels that we work with is really to have the products designed for that channel that they're looking for. So as we know, some asset allocators want to do globally, some want to do regional building blocks, some want just a market cap exposure to start with, then some want to develop into a kind of non-market or other exposure. So it's really understanding the client, their needs, and then working with the tool sets that we have to be able to provide the right ETFs, the right products to meet those requirements.
I think Ian, that's really key. It continues to be key to be very close to our clients. I think some of the innovation that we have seen we produced was very much in conjunction with our clients. I can remember the first currency hedged ETFs that you brought to the market. We then ventured into more sustainability. I think it was clearly based on a collaboration between us, who brought some ideas in, and the client to solve some investment needs. Can you elaborate a bit on that collaboration and the co-production?
Yeah, no, I think it's, again, a real key part that working closely with our clients, as we do across the business, has been key in here to make sure that we're not just creating products that we want, but actually products that the client want to invest in.
Now, we also entered into commodity, gold, completely different underlying. How did you manage that cycle? What was the discussions you had there?
Yeah, I think we've kind of grown the franchise in many ways over these 25 years. We started off with one single platform and equity beta products, and then we've now developed. We have platforms in Switzerland, Luxembourg, Ireland. We moved from the equity products into fixed income. Fixed income at the time, the ETF wrapper was effectively seen as an equity wrapper. So it was quite a big innovation in the industry. And really, even at the time, the market makers were equity market makers having to make markets on fixed income. So it wasn't just the asset manager or client understanding. It was the whole ecosystem that had to change to evolve to push asset classes out.
When I look back, and you alluded to that, Ian, at the beginning and throughout a long period of time of that 25 years, the demand for ETFs was predominantly coming from the retail segment, the wealth management segment, our wholesale segment. As we have moved on and as we have created this core shelf where the largest indices are now priced, I would say, very competitively, we have seen these ETFs becoming attractive for institutional asset owners, whether it's pension funds, sovereign wealth funds, but also central banks. I think there's a lot of benefits to them. Accessibility. It's also not so clear when they do a trade until it settles, so it allows them to take tactical position without being seen in the market immediately. And obviously, this has increased the flow volatility or the chunkiness of the flows to some degree. Has that changed anything in how you need to manage those ETFs or in your day-to-day work?
So in terms of the flows, you're right. The flows can be chunkier than they used to be. And when it comes to liquidity of ETFs, the real key thing is what's the liquidity of the underlying or the liquidity of the hedge. If you speak to our capital markets team, people often kind of wrongly think it's just the size of the ETF that's the key factor, but actually it's what benchmark it's tracking and the ease that the market has of hedging that. So two ETFs tracking the S&P 500, they will both go to probably the futures as the first port of call for the hedge, and therefore it's almost irrelevant the size of the ETF. The spread and the price that clients will get will be similar. But also, I think your point's interesting because I think it's also changed, the conversations we're having with clients, and you know this better than me. But institutional clients now increasingly want this as a core part of the discussion that we're having with them. And maybe they won't be using them everywhere, depending on the size of the client. But there's certain segments where they fit in very, very nicely for ease of access, for efficiency in particular markets. And as I mentioned before, there are elements where you can actually get better returns than you can within that wrapper than you would likely have in direct ownership.
Now, I can see certainly that discussion evolve. It's not just cheap beta that the ETF was meant to provide. It's a much more complicated discussion about how to allocate, what's the best way of allocating, what's actually the liquidity you need, and whether it's more tactical or more strategic. So I think the complexity in the discussions has substantially increased, certainly.
Yeah, and that's why we kind of bring teams together when we have those clients discussions, when they want to move money around, to make sure that we can give that kind of holistic input into their decision-making process. Because you really do need to cover all those aspects. It's not just about the underlying investment or even just the kind of the ticket price. But I think the move to the core pricing, I think, has been opened up a huge new avenue for the products, and I think we're only just beginning to see this continue to play out. And we see in the broader ETF market record inflows into ETFs year on year, and now we're seeing record inflows, as I mentioned earlier, onto the active ETFs as well.
It's very interesting. I had a interesting personal journey on the ETF side as well. Because we talked about it, ETFs were predominantly bought by retail clients. When I first started thinking of how to sell ETFs, it was almost about, that's just a passive exposure in a UCITS wrapper traded on a stock exchange. I mean, nothing difficult to sell. Only when I sort of really understand how we talk about and how we need to sell this, I realized we're actually talking to an institutional intermediary in between who will select the right ETFs on their platform based on very institutional properties like liquidity, like the trading infrastructure that we have in place, and so on. And only there the retail clients gets the exposure through. And I needed to really get my head around it, but we're really talking an institutional product from all its property, yeah. And I think that's almost one of the greatest benefit of the ETF. And I think that's one of the mega drivers of the success of ETFs.
Absolutely, and I don't think that was always appreciated, as you said, from day one, bringing that institutional quality to the retail channel that proved so successful.
But I think what's also interesting, if you look at the European landscape, each market is very different. Sort of the penetration is high in each of the markets and growing, yeah, but very differently. If you look at the German market, it's very different, looks very different institutionally as the Italian market or the Swiss market, let alone the UK market. And I think what it really means, it's the institutional framework that was there, sort of designed the way ETFs are used and where they're used and adopted first. And I think we still have to learn a bit more, and also I think understand what can we copy in certain markets that has worked extremely well and bring into another market. And I think that will help us to scale that business up even more. So Ian, if I'm not mistaken, you have almost 40 years with UBS. I have 26. That's probably the reason why we have been looking at the past, but we also want to look a bit into the future, and we'll have Amanda Robella and Barry Gill talking about that. But I think one important part of the future is obviously active ETFs. It's one of the most important game in town. What does it mean for you now running a platform that also includes now active ETFs?
I think it's a great expansion. I think it's a great journey we're going on now, and it really has brought the whole of asset management together. As you mentioned earlier on, in the early days there was some tension between active and index. Now it's sort of gone full circle, and we're collaborating really closely together. We know most of our clients invest in both index and active. We know they like ETFs, so it's a natural step that they're going to want to invest both on ETFs, both on that spectrum, that barbell approach that we're seeing institutional clients adopt for many years in kind of a more segregated or fund, pool fund basis. So I think it's an exciting step, but it's also a learning journey. And we're bringing all the things that all the good things we know from the index side and the best of what we got from the active side together to make sure that we create products that we believe are kind of really suitable for the ETF space.
Look, I sit here in Switzerland, and we have an interesting product range, which is listed real estate funds. Now, as we venture into more active product, do you see anything that we can't have in an ETF? Is there any stop to the growth of ETFs?
Good question. Well, it's normally about liquidity. And I think when you look at the future, clearly things about like tokenization, could that be part of the ETF story, or could it be a disruptor to the ETF story? I think those things are still to play out. But I think the ETF wrapper will continue to expand. But I think the story is probably less, to your point earlier, it's probably less about do ETFs work? It's more about how I use them effectively in my portfolio construction process. And I think that's going to be the kind of the next generation of discussions, more effective use, more precision within the ETF family we have. But I'm really excited about the active space. Managers, including ourselves, are bringing our best products to market, where I think risk controlling them in the right way for the ETF space. And that's partly driven because we need the liquidity to be right for the space as well. So I think as we progress through time, I know it's early days, but I think as we progress through time, we're going to see the performance of active ETFs outshine active strategies in other wrapper forms. And I think that's going to be another pivotal moment, because we still know there's huge amounts of active that are not an ETF that could migrate over there in the coming years. So I think a huge opportunity and another pivotal moment, as you say, in the space.
I think we learned our lesson very quickly, and it's UBS ETFs since 25 years.
I think that was one of the pivotal moments we had for the history of our ETFs at UBS. I think branding them as UBS, for clients to understand it's the whole power of UBS behind them, I think has been a really important change.
Thank you very much, Ian. That was a real pleasure spending some time with you here. Happy day. It's sunny outside.
Thank you so much for having me.
Please tune in to the next vodcast. It's with Amanda Robello and Barry Gill talking about the future of the ETF business. It's going to be exciting. Please join us.